During times like this, during times when prices go down, when our money is suddenly evaporating, it makes sense to look a bit more at the macro picture. It makes sense to zoom out. There is this saying, right? When in doubt, zoom out. And this is what we're going to do in this video. Because in the end, there is the overarching macro cycle, there is the even bigger adoption cycle, and then there is the daily ups and downs. And what's very important is to keep track of what happens long term as well. Have a look at this chart here. This is the 10-year plus hodl wave of Bitcoin. So how much percent of Bitcoin have not moved in the last 10 years? And chances are that a lot of those Bitcoin have been lost. Not all of them, right? We saw this move in May of 2024, where some of those Bitcoin got moved. But in general, there is a strong argument to be made that this chart will continue to go up over time. Currently, 17% of Bitcoin has not moved in the last 10 years. Now this curve looks quite different once we look at the minimum holding duration of 5 years. Here we see way more frequently how this line sometimes goes down. Over time, it's of course also increasing. And we've already seen how 17% is probably lost. The other 14%, so in total 31%, are used more actively. So probably to a degree, a lot of those Bitcoin are simply just in the hands of the long-term investor. When prices are extremely heated, when they go up a lot, then some of those Bitcoin do move. But even during the move from 5K all the way to 60K, we didn't see profit taking. So in general, this also tends to go up. Now, why does that matter? It matters because it shows us that there is still long-term adoption. There are more and more investors allocating to Bitcoin that are not actively trading. They're simply just buying and holding long-term to protect, for example, against monetary debasement. And as there are more and more Bitcoin in those long-term investors' hands, and those investors in aggregate tend to not distribute, we are seeing that all of the liquid supply tends to shrink over time. The less liquid supply of an asset over time, plus an expanding fiat currency base, means of course that the fiat price, very long term, of Bitcoin should continue to increase. And that's the beauty of the blockchain, right? We can just have a look at those kind of charts regularly. And if then in 2 or 3 years we don't see charts like this going up anymore, that's the point in time where it might make sense to potentially look for the next Bitcoin. Bitcoin might not be around in the next 100 years. It might die at some point, but currently it's very far away from that. Currently it still sees more and more adoption. The liquid Bitcoin gets less and less available. BTC is more and more in the long-term holders' hands. And yes, there can be more than a year where we don't see this line going up much, but over 2 or 3 years we should have a pretty clear indication. This then also explains that when we hold Bitcoin long-term over 3 or 4 years, that it's very rare that we're actually going to lose money, because over that time the supply contracted more. Now, you're not watching this channel in order to just buy Bitcoin and forget about it over the next 3-4 years. You're probably watching this channel because you're wondering, does it make sense to buy or sell Bitcoin? In other words, you're more actively trading, comparatively speaking. And so let's look at a more comparatively active approach. Here is the Bitcoin that has not moved for the last 1 year. Now this is at 62%. It can be regarded as a supply that is trying to time the cycles. It's definitely not the high frequency traders. It's not the people that move their Bitcoin within a few weeks. It's riding the cycles, right? At least holding of 1 year. And it looks like those investors are doing a pretty good job. When the price of Bitcoin goes up, then the holding of those 1 year wallets tends to go down. When the price is going down, then those people tend to accumulate. In other words, we want to sell with those people, right? When the 1 year hodl wave is going down, when those people say bye-bye to their coins, we might do the same. So you would be selling over here very close to the peak where Bitcoin was at 20K. Then we would be buying back in again when Bitcoin was at around 3 to 4K. A lot of distribution happened again up to the 60K mark. And again, when this is high, we want to buy. When this is low, we want to sell. Currently, we tend to be rather low, but have a look at how those lows also increase over time. Again, that's driven by the Bitcoin that's lost and by the long-term investors. Here's the Bitcoin that had been held between 6 and 12 months. and this shows a pretty nice aligning wave pattern, right? We want to sell when this is high, we want to buy when this tends to be low. Now, Bitcoin is still an asset that's dominated by the long-term holders, or let's say by the people that hold Bitcoin for at least half a year. When we look at the supply of Bitcoin that hasn't moved for half a year versus the one that's more actively traded, we see that the active traders actually don't have too much of an impact. Here is the Bitcoin that hasn't moved for the last 155 days, or it's the long-term holder supply. This time not as a percent of all of supply, but just as the number of Bitcoin. And again, we see those very nice charts. We want to sell together with the long-term holders, and we want to buy together with the long-term holders. The long-term holders tend to do the right choices, and they did start selling already when BTC was at 45k, and they continued selling further up. Then they bought very aggressively in September of 2024 to then sell this all off again in the recent weeks. Here's the opposite. So this is the short-term holder supply. So how many Bitcoin are in the hands of people that don't hold Bitcoin for at least half a year. And we do not want to do what those people are doing, right? They're buying based on hype. They're buying based on media attention. They're buying simply just because they heard somebody else made a lot of money with it. But at that point in time, it might already be too late. Have a look at when the short-term holders hold most of the supply. It's always when the price tends to be very elevated and then subsequently sees a correction. We are not at historical highs, right? We had been more active in April of 2021 when Bitcoin moved from 60k to 15k, but we aren't necessarily low either. And again, the long-term holders tend to take over more and more of the supply over time. So I believe that those peaks will likely go down over time. So we're likely going to see less and less of that short-term speculative demand for Bitcoin. Because nowadays also a lot of speculation doesn't necessarily happen directly with BTC, but rather with the altcoins. That's where all the stories are, right? Somebody bought an altcoin for just $1,000 and then became millionaire within a week. That doesn't happen with Bitcoin, and so the short-term attention is on those lottery ticket-like cryptocurrencies. And that's why we're likely going to see more and more long-term investments in Bitcoin as well. The active trading will diminish over time. Now, here is what's important to understand. The long-term holder adoption continues to go up. There's more and more long-term investors that buy Bitcoin that don't move it. That does not mean that the activity on chain is going up. The number of active addresses is actually stagnant for many years already. And so this tells us that probably Bitcoin does not necessarily have a scaling problem, right? This is what a lot of people are worried about. Bitcoin transactions cost some money, and if there's too many people transacting Bitcoin, then a single transfer might cost hundreds or thousands of dollars at one point. But I don't see that coming because the number of active addresses is simply just going sideways since 2016 when Bitcoin was just at $600. We are at the exact same levels in terms of activity, and the price is up by roughly 150x. So all of that price appreciation is just long-term holder accumulation. It's all this and this. And so those price drops that we see, right, those 80% over here or those more than 70% over here, they don't happen because of those long-term holders. They happen because of the liquid supply that's left. This is actually quite counterintuitive. Of course, over time, the volatility, so the ups and downs of Bitcoin, should reduce because the market cap is going up and it takes more and more money to move the asset. However, if at the same time we see less and less liquid supply, it doesn't take that much money in order to move the price. So let's take a simple example. Let's take the property market. Let's say we've got a gated community with very similar houses, and we've got, say, 200 of those houses. Now, people are not trading property super actively, right? You buy your house and maybe a few years afterwards you're selling it. That means we can move a lot of market cap with just a few transactions, because future transactions always look at prior transactions as a reference point. Let's say one family in this estate gets into trouble and they have to panic sell their house and they need that liquidity and they have to sell it way below what people thought is the market rate. Then after one transaction, that might be considered an outlier, but if then a second transaction and a third transaction follows as well, suddenly all of the houses in that estate will be valued down. So it only takes 3 houses to move the price of 100 or of 200 houses. It doesn't take much capital in order to move market caps. And that is what over time will also happen for Bitcoin. There will be less and less liquid supply. More and more people will keep on holding their Bitcoin. And because of that, the price swings will not go down as much as people anticipate. The market cap can go 10x up and the prices can still sometimes drop by 30, 40, 50%. I still believe this will continue, even when Bitcoin is, say, at $500,000. There is, of course, a bit of an effect of decreased volatility, right? This drop was more than 90% and this one was only 70%. But again, it was 70% while the market cap was thousands of times higher. Now, what does this information mean for us? Over time, over the very long term, Bitcoin will continue to see investor adoption. If that stops, we will also see this very quickly in the charts, right? Within 2 years. While we are seeing that adoption, we can take advantage of price drops. We can take advantage of bearish times. The only question then is, what is a potential trading range? At what point in time will Bitcoin become dirt cheap? When does it make sense to buy way more than others? When can we actually handle more volatility? And my favorite way to track this is the realized price. So this is the average cost basis of the market, or the psychological anchor point of the market. So it shows us for what kind of price did the average Bitcoin holder get their Bitcoin for. If you're trading altcoins, you're very aware of this, right? If you're currently in the negatives of your altcoins, you have a very hard time to sell. You don't want to realize losses. It looks like making a mistake. When you are in profit, you are considering to sell, right? Because sometimes it might sense to take profit, to maybe use this just for consumption, or maybe to allocate towards other assets. Thus, the price you bought at is your own anchor point. The price that the market in general bought at is the market's psychological anchor point. And again, the price tends to not go down that much anymore once we are below the realized price. This is when the market in aggregate is in losses. We want to buy during times like this, when the current price is below the realized price. It does not happen very often. It only happens every few years. And last time that happened was when Bitcoin marked at 20K. And then it fell further down. Yes, it's not a perfect bottom indicator. It still fell a bit. But if you're dollar cost averaging during times like this, right, when you're buying in heavily during times like this, to then sell when the market in aggregate is in profit, isn't that a good strategy? Again, the issue is that those kinds of moments don't happen all the time. And currently that anchor point is at 43,400 only. So that's a drop of more than 50% from here. But in the end, I believe this is the best way to ride those crypto cycles, right? We have to believe in the asset long term. We can't do this with Fartcoin, for example, because who knows where Fartcoin will be in 5 years. But with Bitcoin, we do see the long-term adoption by those long-term investors over time. So we can take advantage of bottoms. We don't have to be too worried despite the volatility. The only reason not to buy during drops like this is only if you believe that Bitcoin will die entirely, that maybe something else will replace Bitcoin. Maybe there's a new story in town at that point, who knows? But very often those price drops, they don't necessarily happen because there's less trust in Bitcoin. They just happen because people start taking profit, and that then accelerates with some fundamental news as well, right? This is where Terra Luna collapsed. This is where FTX collapsed. This is where some miners sold. This is the COVID crash. It's not really something that fundamentally changes the long-term investment thesis into Bitcoin. Now there's another psychological anchor point, and unfortunately during prior bear markets we did hit that point as well. I'm not so certain though that it will happen again. This is the long-term holder realized price. So let's remove the market value to realized value z-score. That's a bit more of an advanced concept to be discussed later on this channel. If you don't want to miss that, feel free to subscribe subscribe over here. But what we see here is basically the realized price of the people that tend to not trade Bitcoin that actively, the average cost basis of the long-term holder. And during the miner collapse in 2018, during the COVID crash, and also after the FTX collapse, we also hit that level. And currently that level is only at $25,000. That's quite scary. The question is, are we going to hit this one more time? Because the ups and downs are made by the short-term holders and they become less important over time as more supply is held by the long-term holders. Still, I think it's important to keep an eye on this line. If you go massively risk on over here, if we even take, say, a personal loan to buy Bitcoin, or if we sell maybe our luxury car to buy Bitcoin, or if we do something relatively drastic in order to buy Bitcoin, we should be mentally prepared that when we buy at around 40K, that potentially we could also fall to 25K temporarily. Long term, I don't think that we will fall much more than that. Again, because of the long-term adoption of investors, not of active traders, right? Just of long-term investors. But that's a potential risk that we take at those price levels. Again, I'm just drawing scenarios here. I'm not saying that we're going to meet those prices tomorrow, but we just have to look at what happened in the past, right? How much can a bear market accelerate? How risky is Bitcoin really? And at what point in time does it make sense to take that risk? Now let's play the scenario a bit further. Let's play with the idea that Bitcoin is really trading now at $25,000. It might not be the most likely scenario, but the scenario definitely has not a zero probability as well, right? Things can happen. Nobody thought over here at 20K that Bitcoin would ever hit 3K again. And so nobody thought at 100K that we might go to 25K. Let's play with that scenario. Can we, in that case, go 100% all in? Can we sell all our stocks, all our gold, our house as well, everything that we have that has some value, put it into Bitcoin? Does it make sense to bet all of those 5 years of income just on Bitcoin at the time? Now, the traditional finance approach towards this, right? The traditional financial advisor says we always have to diversify across asset classes. But I personally think that it does make sense to be over allocated to an asset if we strongly believe that this asset is undervalued. Let's say you know the property market very well. So let's say you're a real estate agent, you look at various houses every day, you know the market super well, and then you see this one offer that's suddenly 40% underpriced or 50% underpriced. Does it make sense to buy that house even if it takes all of your wealth? Potentially. The problem is, of course, always the big macro environment, right? Even if you found a house that's massively undervalued, if now the housing market itself collapses, you might not make much money, you might lose money. And if you put in everything, right, and you've got a lot of money, and suddenly your 5 years of income go down to only 2 years of income, that's a pretty bad hit. So you don't want to be 100% allocated. You want to be over allocated, but not 100%. And here's the reason for Bitcoin. Historically, we have never seen the price of Bitcoin staying below the long-term holder cost basis for a long time. Historically. But the history of Bitcoin is not representative. Have a look at this. This is the long-term S&P 500 chart. It's very long term. It starts in 1871. So that is 150 years of data. And over here we've got the Great Depression, where stocks went down by 85%. Subsequently, we had our oil crisis. Stocks also got cut roughly in half. Here is the dot-com bubble burst, also a drop of roughly 50%. And here we've got the global financial crisis, also a drop of 50% roughly. This vertical line over here, this is when Bitcoin got created. Bitcoin got launched at the bottom of the global financial crisis. We've never really seen that much of a drawdown during Bitcoin's history. Yes, we had the COVID crash, but COVID was only 25%. So those are 2 weak data points, right? When we look within the week, the crash was a bit more pronounced, but still. Right? We've never seen something really drastic during Bitcoin's existence. And here's the issue. Have a look at this at the bottom. This is the correlation coefficient. The 90-day correlation coefficient between the S&P 500 and Bitcoin. Initially, we didn't have that much correlation. Now we've got a ton of correlation, 0.94. Now here's what that means. When Bitcoin goes up, the stock market goes up as well. When Bitcoin goes down, the stock market goes down as well. So the two assets tend to move more and more in tandem with one another. That's what correlation means. And because of that, never having seen any major crisis during Bitcoin's lifetime is a problem, because that means that all of the models that we have with the realized price, etc., they might not really be representative. We might at one point go that low that it would be impossible to predict with models like this. Again, because we've never seen something like this, right? When the stock market crashes by 50%, then Bitcoin is probably not just going down by 70%. It might go down again by 90%, who knows? And because of that scenario, which again doesn't happen all the time, it happens maybe every 20 years or so, because of that marginal scenario, it makes sense to not be 100% in Bitcoin at any point in time, especially if you've got significant money in Bitcoin, right? If you've got only a few months of income saved up, then by all means put it all into Bitcoin. But if you've got several years of income saved up, then it does make sense to always have some money also in gold, for example, something that is 100% risk off, that can protect in case of the very, very worst case scenario. So what happened during Bitcoin's lifetime with stocks? At the end of the global financial crisis, the Shiller PE ratio, so the price to earnings ratio of all stocks in the US, went from 14 to 37. So it's now more than 2.5 times more expensive to buy the future earnings of US companies. And again, this chart has a very long history. It starts in 1871, and we are moving in somewhat of a predictable range. And I don't dare to predict if we go up to 50 in the Shiller PE ratio, or if you're going down to 20 or to 10. But we can clearly see that the stock market had been very favorable for Bitcoin during its lifetime. And that might not happen forever. At some point, we might see a depression. And then again, all of those models might not hold. At that point, we still want to have some money left, even if Bitcoin goes way below 25K, right? Maybe 15K, maybe 10K, who knows? So again, this ended on a very bearish note, but I do believe that Bitcoin long-term is an outperforming asset. We still see long-term investors continuing to accumulate, and I do believe that buying the bottoms, buying below the realized price does make sense. What matters though is still risk management. Even if we are at low prices for Bitcoin, as we go lower and lower below the realized price, we can have more and more allocation. But we should never be 100% allocated to Bitcoin. We should still have something that is risk off, especially if our wealth is somewhat large relative to our income. Now, I personally, I don't just wait for the price to come down. I try to make money even during the bear market. I don't buy altcoins, I don't buy Bitcoin. What I'm doing is I'm betting on falling prices. And I know this is somewhat of an advanced topic, but making money when times are tough requires the extra step. And that is why I've made a lot of tutorial videos on the topic. How can we make money in bear markets? How can we do proper risk management? How can we allocate within our portfolio, set stop losses properly, and grow our wealth beyond just buying and holding Bitcoin? I'm of course also sharing my view on the market regularly. So over here, for example, on the 25th of February, before the big sell-off, I published how I am selling aggressively. Now, I don't get things nailed down that perfectly always, but I've been around for quite a while, and in the last years at least, I was able to buy comparatively low and sell comparatively high. So feel free to check it out, the premium membership. It's currently $125 US per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Looking forward to seeing you again here on YouTube. A like would be very much appreciated. It helps the channel grow, and of course see you potentially in premium as well. Cheers.